We are optimizing for a long-term Bitcoin yield maximization, meaning to increase as fast as possible the number of Bitcoin per share. We are positioning ourselves as a Bitcoin Treasury nuclear reactor for Europe, and we want to build an engine and a machine of Bitcoin accumulation that scales. Everyone is competing for Bitcoin. Any new company that wants to accumulate more Bitcoin is in the same market as we are to accumulate more Bitcoin. It's like saying that Google or Amazon wouldn't be in risk back in the 2000s if more companies adopted the internet. It's literally the opposite. The more companies that will adopt Bitcoin, the more Bitcoin treasury companies that are focused on maximizing Bitcoin per share and that are not there to just do it for a quick announcement pump will be the most valuable companies on earth in the next 5 to 10 years.
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey, Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury Company. As always, I'm in the studio with my co-host, co-founder, and CEO of Acropolis, Chase Palmieri. And this week, we are joined by Alexander Lzay. He is the Deputy CEO and Director of Bitcoin Strategy at the Blockchain Group, which is Europe's first public Bitcoin Treasury company under the ticker ALTBG. Alexander, very excited to have you on the show this week. Welcome.
Thank you so much, Mason and Chase. My pleasure. Very much looking forward to the conversation with you.
Absolutely. We are as well. We prepare interviews every week and try to do great research to come up with original, nuanced questions for our guests. So hopefully everything here is fresh. I'm curious, what is it like preparing for, or what was it like preparing for your interview with Michael Saylor and Adam Back for Bitcoin Prague a few weeks ago?
Actually, it's a lot in the head because of past conversations you've had with Michael and Adam, and I'm regularly on the phone with Adam. I've had a couple of one meeting with Michael, and I of course hear to what they are saying on regular podcasts. I see what is the market saying about strategy and about Adam's vision and Blockstream and so on. And when you assemble all of this, then you come up with what are the key questions where you would definitely want to have both the point of view of Michael and the point of view of Adam. And actually, this conversation never happened publicly, like both of them, two major legends together. So I think it was just a great opportunity to have them both speak, and I found the questions that would enable them to get the most out of what they think out there in the public that I thought might be still misunderstood by the public, but that I knew that Michael and Adam had in their mind. So that was the key objective, to ask the questions that I would think that would add the most value to the audience.
Yeah, and in that conversation, Adam said something really interesting. He said that investing in a Bitcoin treasury company can be forgiving. And he kind of elaborated on that, saying that if the price of the Bitcoin treasury company's shares stays flat while they continue acquiring Bitcoin, that you're effectively getting in cheaper, especially in terms of MNAV. So I'm curious, can you elaborate on that concept a bit for our listeners?
Yes. Well, I will give a very simple example. 1 year ago, some investors bought Metaplanet at more than a 10x MNAV, so the premium. And today, effectively, because of the amazing work of the Metaplanet team, the net asset value of Bitcoin on their balance sheet is higher than the market cap at this time. So that's an example that shows you that an investor that comes in and buys what is in a very short term a higher price than someone that came in before, effectively, if this person has conviction and long-term time horizon, and of course, if the treasury company executes, then it means that the risk you take is more a timing risk if you are short-term oriented. But if you have a conviction, if you have a long-term time horizon, it's like with Bitcoin, effectively. Bitcoin is quite forgiving in fiat terms as well. If you are able to wait at least 4 years, the best time horizon is forever. But that's quite similar with the addition that, of course, the Bitcoin treasury, if it executes well, is working for you. And so we observed the same back in December, investors that bought the blockchain group at an 8 to 10x MNAV. In March, April, they got completely covered in terms of the cost basis they had. We transformed the market cap price they bought into net asset value of Bitcoin in one single operation. And so that's to say that for Adam, what is important as a message is that, yes, the premium is important, but what matters as much is the time to cover the premium, and it's the metric he literally invented, the months to cover MNAV.
Yeah, it's a really interesting point, and it's one that I often raise when people ask me if the Bitcoin Treasury company kind of momentum right now and excitement is a bubble, or if it's something like the ICO craze where we should expect it to top and then crash out and maybe have a prolonged bear market. And my response is kind of something along those lines, and obviously yourself and Adam put it really well. But the idea is that as long as the company can hold on to the Bitcoin it has acquired, and Bitcoin's price continues to increase, then you'll eventually, make good on that investment. It's really just about time horizon. So Adam Back is also a pretty significant shareholder in the blockchain group, which is up nearly 4,000% over the past year. So congratulations. We work with CEOs, executive teams of Bitcoin treasury companies all the time. And so I want to talk about this maybe divergence that can sometimes occur between the share price and Bitcoin's performance. So just in the last month, and this is as of yesterday, the blockchain group's shares are down slightly while Bitcoin is up slightly. And so I'm curious, when something like that happens, which again, a very narrow window, because over the last year, y'all have done incredible to outperform Bitcoin. What do you have to do as the CEO of the business? Who in the business do you have to reassure that this is okay? And how do you explain that divergence when it happens?
It is a very good question, Chase, and a question that many investors ask. The short answer is we are not optimizing for 1 month's performance. We are optimizing for a long-term Bitcoin yield maximization, meaning to increase as fast as possible the number of Bitcoin per share of the company. And that number of Bitcoin per share is on a Bitcoin standard, not on a fiat standard. And so at the same time that you are doing extremely well in terms of BTC per share accretion for investors, you can indeed, as you mentioned, have a bad month in terms of fiat performance. That's totally possible. I would invite investors to zoom out in this case, because when you look at a 6-month chart, you see that we largely outperform Bitcoin, because we are talking about 1,000% performance of the share versus Bitcoin at 20%. So that's also related to the comment of Adam that we previously discussed. We are able as a company to cover the premium in 4 to 5 months. So effectively, you know as an investor that the risk you take is that during 4 to 5 months, and potentially, of course, longer, I mean, that's what we've done to date. It can be longer. You know that the industry range is between 5 to 15 months. And so if your time horizon is lower than this, you know that your risk is effectively that the premium might go lower than your cost basis within a short period of time. And so to be very specific into what happened during last month, and what we saw quite affected a bit the share price performance for a short time horizon, because I also understand and we treat all shareholders with the same level of respect. If you entered last month, you would not be happy with the share price performance during 1 month potentially. Unless you are just looking at the long-term perspective and you don't care about the cost basis. You know, you could argue that if you entered Bitcoin at 122K, you would not be happy with the price of Bitcoin going to 110K. And at the same time, the investor that got in at 40K doesn't really care about the price of Bitcoin going from 120 to 110. And this will always be the case. And so that's in general why I would recommend that the right term, investment horizon for Bitcoin is at least 4 to 5 years. And the best one is potentially 21 plus years or forever. And so it doesn't make a lot of sense to have a lower time horizon on a Bitcoin treasury company. Then at the same time, I also understand that maybe 90% of investors are investing in Bitcoin treasury companies to effectively make more Bitcoin. And so in many ways, for many investors, it matters what the share price does because it impacts whether they can make more Bitcoin or not. And then in this case, I would invite investors to specifically look at our months to cover the MNAV. And I would assume that if it's a time horizon lower than this, then the risk is higher. And so then on potentially what could have happened during the last months, and if we put numbers on it, Bitcoin is up 10%, we are down 30%. So of course, that matters for investors that entered 1 month ago. And so the context I can provide is that this is extremely similar to what happened back in February this year. In February this year, we had some short selling as well. We had February, March, we had Citadel shorting the stock. And at the same time, investors were waiting for us to do a major type transaction. And so by waiting for this, the share price suffered a little bit with Bitcoin going slightly down as well. And so 1 month later, we literally increased the Bitcoin on the balance sheet by 15x and the number of shares by 2x, and we generated 700% of BTC yield in one single operation. So I don't say, of course, that we will necessarily be able to do that. However, what I can say is that we relentlessly work to be able at some point in the future to get as close as possible to that type of operation. Of course, it's a bit different because we have a different size and it can take many different forms. But what we have done in June is add a number of Bitcoin on the balance sheet that allowed us between May and June to go from 620 Bitcoin in March to 1,900 Bitcoin on the balance sheet. So I would call that high accretion. And we went from 700% BTC yield to 1,300 plus % BTC yield. And we are continuing to do it relentlessly with new tools. Back in March, we only had equity in private placement and BTC convertible debt. Now we have an ATM type structure in place that we launched in June, together with the equity, together with the BTC convertible note, and an authorization to do basically any type of security offering within a 10 billion euro authorization of capital raising. So I think we did a lot of things right. I think something we did maybe not in the right way in terms of timing was the US OTC ticker. We started actually the process like 2 months ago. So we were ready for it, but it took a bit longer. And I think that affected a little bit the share price during the month of June because you had other companies having it and not us. Today, we are in the final steps of this. And I think that together with the fact that you've had new Bitcoin treasuries launch as well, and that also, of course, took some of the attention from the blockchain group to these new companies. Of course, that potentially affected as well in terms of short-term performance. Then what I believe is that investors also start to realize that at the end of the day, it's not only about doing an announcement of adopting Bitcoin. It is about having a full-fledged, complete strategy of becoming a really Bitcoin treasury company in the purest sense, meaning adopting the strategy playbook, securitizing Bitcoin at scale, and having the right team of financial engineers and capital market experts to be able to maximize the number of the amount of capital raised with the number of Bitcoin on the balance sheet. We've been told that we should increase faster the number of Bitcoin. I would remind that, not that far ago, 3 months ago, we were doing an announcement each month. Now we are doing 2 announcements each week. And the ATM type structure goes with the volumes. So the volumes were slowed a little bit, and it's summer, so it got slowed a little bit. But we believe that with the mix of the ATM type structure capacity, the OTC listing on OTC ID in the US, and our relentless work in terms of, in parallel, preparing both for of course, the major interest of investors and aggregating that at some point into a major operation, if it can happen, together with the preparation of new potential securities we could issue, first on a private basis and then using the authorization we have to do public offerings. But that takes a prospectus that needs to be approved by authorities, and that takes a couple of months, of course. All of this to say that we are here for the long run. We are here to optimize and maximize the number of Bitcoin per share. And that can take sometimes a transition period. And I think that might have been June, July for us. I believe that we are positioning ourselves as a Bitcoin Treasury nuclear reactor for Europe, and that we specifically want to build solid foundations, and we want to build an engine and a machine of Bitcoin accumulation that scales, and sometimes that takes a bit of time. But we are positioning for it, and that's what I would say in the long format.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin Treasury strategy. We're the experts your business needs. Acropolis offers trusted Bitcoin advisory. We provide you with an outsourced Bitcoin strategy officer, world-class research, an accretive financing team, and more, so you can navigate Bitcoin's market with confidence and acumen. Best-in-class custody with multi-institution custody. Eliminate the risk of loss while maintaining full control of real Bitcoin. Acropolis exclusively uses multi-institution custody as the safest and easiest way for businesses to hold Bitcoin. Bitcoin-only solutions. The Acropolis platform is designed for businesses of all sizes to seamlessly manage their Bitcoin treasury, and we focus solely on Bitcoin to offer you the most specialized services available. Adding Bitcoin to your balance sheet is just the beginning. With Acropolis, you're not just adopting Bitcoin, you're mastering its strategic use to create and maintain value for generations. Take the first step and start your corporate Bitcoin journey with Acropolis. Book your free consultation today at acropolistreasury.com/book and start implementing our proven strategies within days. I love it. The Bitcoin nuclear reactor of Europe. I think it's a great analogy and very well said. You recently raised Bitcoin directly. What do you offer to get people to part with their Bitcoin? And why is raising Bitcoin better than raising cash to buy Bitcoin?
So the first observation is that even when companies raise cash, many times it can be from Bitcoiners that are selling Bitcoin to send cash.
Mhm.
And so when we raise Bitcoin, many times it can also be an investor that has cash, buys Bitcoin and sends us the Bitcoin. So you have to distinguish the payment mean between the transaction ultimate result. And in both cases, it is to have Bitcoin permanent capital that you don't touch. Either you raise cash or you raise Bitcoin. What we did is to go a step further and completely eliminate the fiat process and exposure and sign directly contracts for the BTC convertible notes in Bitcoin itself. And you know that's extremely important. When you are in the process of negotiating an agreement with an investor, but in the meantime the investor is sitting on Bitcoin, that is much better than sitting on cash during 2 months. Because if you sit on cash during 2 months, in the context we are in today, at any time you can end up with zero, you know. Of course, I exaggerate a little bit with zero, but it could happen. And we've seen like 10%, 20%. It's not funny to lose 20% of Bitcoin because of the price appreciation and because you couldn't buy Bitcoin. So effectively, it is much better to have agreements on a Bitcoin standard and focus on the value creation of the deal instead of having your fiat being melted away by waiting for a deal to happen. So that's extremely important. And effectively, your investors are richer if they are on a Bitcoin standard. So effectively, you're able to raise more capital many times. But that's true as well for early stages. We are still in very early stages. Significant amounts of Bitcoin can be brought in still by unique Bitcoin maximalists, OG, that would have Bitcoin from the old days, and that can happen very quick. At the same time, we are aiming to really tap into credit and capital markets at scale. And this is at the same time 97% of global capital that is in securities type of capital pools. And for this, today you use fiat. So our use of the BTC denominated convert is very much related as well to our capacity to address the Bitcoin-based market at the same time that we prepare for the issuance of securities to address the traditional fiat capital markets. And in both ways, we are looking in Bitcoin permanent capital that just makes it harder for the overall market to get more Bitcoin, because this Bitcoin is not out there for being sold anymore when it enters the balance sheet of a Bitcoin maximalist Bitcoin Treasury company. So signing contracts on a Bitcoin standard is much better than having this fiat type exposure during weeks or months sometimes.
Yeah, it makes a ton of sense. I mean, if you think about it, anytime you're changing currencies, there's an inefficiency there. And if what you're raising capital from are folks who own Bitcoin but want to securitize that Bitcoin or have exposure to Bitcoin equities, then it does not make sense to ask them to sell their Bitcoin, take the tax hit, and then send you the dollars, and then either them or you sitting in debasing dollars and not sitting in Bitcoin, which we all know goes up, 10 days a year, creates, I think, something like 95% of its overall performance. So it's a very efficient strategy to actually be subscribing or raising in Bitcoin terms. So I applaud you for that strategy. I will be looking to see more companies following suit. It seems like a very logical new iteration to the strategy. And so I'm hoping that we can, I guess, let me ask, do you see other Bitcoin Treasury companies within your own market as competition? How do you think about, just the other companies that you're competing for dollars or capital with?
Look, everyone is competing for Bitcoin. So any new company that wants to accumulate more Bitcoin is in the same market as we are to accumulate more Bitcoin. And at the end of the day, what matters is the speed, is the robustness, and is the relentlessness, and is the core principles of the Bitcoin Treasury company, the Bitcoin maximalism, and the understanding of the core business of Bitcoin Treasury company in a purest sense, meaning the playbook of strategy specifically, that makes the difference. So at the same time, we are not competitors as well. We are on the same mission. We are effectively contributing to each other's success. And I would say that I've been impressed and I've been very glad to see the growth of the Smarter Web company, for example. H100, for example. I know there are many others in Europe that are launching that I'm less familiar with, but I mean, you cannot be anything other than happy to see this development of new Bitcoin treasury emerging. And that's just proving that the demand is there, that the capital markets are extremely eager to do this type of transactions, that the retail market wants more Bitcoin treasury companies, and that basically the investment thesis that in 5 to 10 years, you will have 30, 50% of companies that will have Bitcoin on the balance sheet as they have monetary funds right now is correct in the trend that you see right now. At the same time, you cannot say that this doesn't have a short-term impact on everyone's share performance, because if you have one new Bitcoin treasury company launching every day, that disperses in some ways investor attention. But the point is that we are still only addressing like 3% of global capital. So the whole value proposition of a Bitcoin treasury company in the purest sense is to securitize Bitcoin and to create securities that will address 97% of global capital. And in this sense, there is so much room for the Smarter Web, for H100, for the blockchain group, for Metaplanet, for strategy, and so on. And so that is just the state of the market. And of course, for investors, at the same time, each investor has the choice of which company they invest in. And so each investor will have to make a decision on which company, which management, which leadership, and which market jurisdiction and all of the different factors are the best fit for its risk return profile and own investment thesis. And what we believe is that, yes, there is thousands of companies that will adopt Bitcoin, and that is a great thing. There will be more Bitcoin treasury companies, and that is a great thing. And to give you a very specific example, it is in our best interest that the Smarter Web company in the UK has an amazing and a great success, because the investors that will invest in the Smarter Web, if that works, they will be very open to looking at other opportunities with the blockchain group, for example. And the same on the other side. And so we are literally forming an industry. And as we are forming an industry, then you have global leaders that emerge. And so it's like saying that Google or Amazon wouldn't be in risk back in the 2000s if more companies adopted the internet. It's literally the opposite. The more companies that will adopt Bitcoin, the more Bitcoin treasury companies that are focused on maximizing Bitcoin per share and that are not there to just do it for a quick announcement pump, and that are effectively working on being the fastest at issuing the right securities in the market in a risk minimized way and in a way that accrues the most Bitcoin per share, will be the most valuable companies on earth in the next 5 to 10 years. And I'm pretty sure that everyone that has done the analysis can count with one hand, maybe each investor its own one hand, the companies that are effectively the ones fully focused on maximizing Bitcoin per share. And that is how I think that you have an outperformance in the market, is that 99% of companies will first not understand that you need to focus on Bitcoin. Second, they will not understand that you need to allocate all of your long-term capital to Bitcoin. And third, they will not understand that you need to allocate 121% of your focus to maximizing Bitcoin per share. And that goes not only by trying to do equity raise and hoping for a premium to form, that goes with a team that is focused on securitizing Bitcoin to open access to a form of Bitcoin exposure to capital and credit markets with dedicated securities that can take some time to completely and fully materialize in fiat gains, but that is effectively the best strategy to maximize Bitcoin per share and over time to provide more Bitcoin exposure to investors, and over time to allow for investors to, at the end of the day, end up with more Bitcoin exposure and more Bitcoin potential on their own personal balance sheet at the end of the day.
Right. So a way to think about it is, yes, you are in the market and therefore competing for capital against these other Bitcoin treasury companies. But at the same time, if a competitor or another company that is running the Bitcoin treasury playbook, if they raise capital and buy Bitcoin, well, that only further increases the scarcity and the price of the Bitcoin that you are holding. And so ultimately that capital finds its way into Bitcoin, finds its way into a higher Bitcoin price, which just increases the enterprise value of your existing holdings. And so, it's hard to argue that they're true competitors if they are, can increase the enterprise value of your business through their own activities, which is a really amazing thing about Bitcoin. And so for this next question, we've established now the importance of Bitcoin yield, this idea that increasing Bitcoin per share and as quickly as possible is really an important metric, perhaps the most important metric for a company that is exercising this playbook. And we've also now established that you're not a pure competitor with any other company that is running the playbook. So I'm curious if you could give some strategic advice here. I want you to imagine that you're in the shoes of the CEO role of a company that just got listed, now has access to public capital markets. They're sitting on $10 million of cash. They have no Bitcoin yet, and they want to run the Bitcoin Treasury strategy. How would you think about the best way to deploy that 10 million in cash to maximize the Bitcoin yield and investor interest? Since I'd imagine you would not encourage them to just do a one-time lump sum buy, that you might think about spacing those buys out with that 10 million to try to kind of boost Bitcoin yield over a time period. So can you explain, if you were starting today, knowing everything you know now, $10 million in cash, no Bitcoin yet, access to capital markets, how would you think about deploying that 10 million?
I would distinguish between what is the long-term capital between the 10 million and what is the short-term treasury that is needed for operations on a daily basis. Then assuming that that differentiation is already made and that 10 million of cash is already the long-term capital, the right thing to do is a lump sum buy of 10 million. The best time to acquire Bitcoin is yesterday. The second one is today. And so it needs to be done. If you believe in Bitcoin over time, your shareholder responsibility is to do a lump sum buy. If, of course, in a responsible way, if you have previously called your historical shareholders, your board members, everyone is aligned, and so on. If it's not the case, then you have the responsibility to do it properly from the relationship with your past shareholders and, of course, board members. And, as if you are a publicly listed entity, you will still have some procedures to follow and to do it. That in and of itself will be a delay that will potentially make you end up with less Bitcoin. Potentially, you would end up with more Bitcoin if the price goes down. But if you are a Bitcoin maximalist, you know that the price doesn't matter. What matters is the number of Bitcoin you get. So you don't want to try to be cute by doing a 1 million buy and then in the objective of announcing a form of BTC yield because you did then a 5 million buy and a 10 million buy. That might work, and potentially, arguably, it could perform better on the market. What works best, I think, is to do a lump sum buy of $10 million and simultaneously call investors to raise more capital and do another lump sum buy of $100 million. That's much better. So then, of course, you need to have and take very seriously the fact that you will need to have, if you are not yourself, you will need to work with a Bitcoin maximalist type of person that is a Bitcoin Treasury company expert. And you will need to be careful, because it's not because someone says that he is a Bitcoin Treasury company expert that he is a Bitcoin Treasury company purist in the sense of the strategy playbook. The two questions I asked the board of the company before I joined was, is this only about Bitcoin? Answer was yes. Is it only about the Bitcoin Treasury company playbook of strategy specifically? They said yes. And based on that, I said that we can continue the conversation. Because if it's something more complex, if someone wants you to play with your Bitcoin, if someone wants you to do cute things, to try to artificially give an impression to the market, that is not the right way to do it. And the right way to do it is to do it with the most ethics from a Bitcoin maximalist perspective and from a capital markets perspective to have the most transparency. Then I would like to caution with the fact that the market many times has the impression that a company is having some delays, by having purchases over time. Many times it's literally because of the regulatory procedures you have to follow as a publicly listed entity or with your banking partners and so on. And so many times when investors think that, this company announced this capital raise 2 weeks ago, but they didn't yet deploy. They want to deploy it, just that the cash. So first, the administrative process to raise the capital needs to be done. Then you have lawyers. Then you have fiat processes to receive the capital. Then you have to wait sometimes for all of the investors to have sent and for the company to have received all of the cash to approve the transaction and then liberate the capital and then send that to the bank that will buy the Bitcoin and then buy the Bitcoin, then do prepare the press releases and so on and announce that. And that can take sometimes 3 days, sometimes 1 week, sometimes 2 weeks. For companies, sometimes it takes 2 months because if you are starting, sometimes you have a lot of things to set up. So I would like to caution and say that I'm not saying that other companies are not doing that because many times you have regulatory and business constraints. But I'm saying that if you can do it, the best strategy is always to accumulate as much Bitcoin as possible, as fast as possible, in the most accretive way as possible. So then you could argue that in the 10 million, the most accretive way from a market perspective would be to announce 1 million, have the share go up, then raise capital, and yes, potentially. But again, it would be even better if you put in 10 million and you raise at the same time 100 million.
Yeah.
Because you end up with more Bitcoin. It's always the same as in life. What matters is to end up with more Bitcoin. And so as a company, if you don't follow the 3 principles I mentioned, then you end up with less Bitcoin. Because if you end up with fiat exposure for longer than others, you have less Bitcoin on an average basis over 5 years. If Bitcoin, of course, continues with its trend of adoption at the same time it has the fixed supply by being the most decentralized and secure network in the world, then that will be the case.
Again, very well said. I want to make sure that we get through the rest of the questions that we have, so we might go a little bit quicker from here. UTXO management, that is a term that has 2 meanings in Bitcoin. The first meaning the organization of your unspent transaction outputs, and the second meaning as one of the best performing venture funds in the world last year that has recently made a name of itself for really focusing on the Bitcoin Treasury company play. And we know that they're working directly with a lot of the Bitcoin Treasury companies. So for people that are watching the UTXO-backed Treasury companies, they want to know, how involved are they day to day and where do they help the most?
Look, what is absolutely amazing and extraordinary about UTXO is that they are here when nobody is here. And so effectively, because of all of their knowledge, expertise, network, but most importantly, conviction into the Bitcoin Treasury company model and how that affects extremely positively the Bitcoin ecosystem as a whole, they are able independently to do their own analysis of a specific country, specific jurisdiction from a capital markets perspective, of a specific company, exchange, and management and leadership team, and assess the strategy. That is extremely unique as a team. You don't find that very often. We've been lucky to have as well Adam Back, Fulgur Ventures, Tobam, and I can tell you they are this type of investors as well. This type of capacity of analyzing independently and taking your own decisions and not basing yourself on FOMO and so on. That's extremely valuable as a company. And I think that's one of our key advantages, to have this type of investors as the core basis of the capitalization table. And so it is extremely similar for all of our strategic investors. We have regular conversations with them, and they are extremely available and extremely helpful in any ways, in terms of the strategy, in terms of the capital raising, in terms of the network capacity. Of course, UTXO management is part of Bitcoin magazine, the organization BTC Inc., and so on. And of course, as a company, you definitely benefit from the exposure of the fact that UTXO management invests. And given the success they had with the companies they have invested in, then that gives a very good orientation into the potential of a company that receives an investment from UTXO management. But I would very much like to say that I'm absolutely impressed by the quality and by the professionalism and by the vision of Tyler Evans and David Bailey. I think, and together with the team, I think they are doing an absolute incredible job for Bitcoin and for Bitcoin treasury companies. And so they are very much present at the same time that, it's when, of course, it's needed as well. And I think they can also adapt themselves to the circumstances of each company.
And for yourself and the other CEOs that are running this aggressive kind of accretive dilution strategy, whether within the UTXO portfolio or elsewhere, how do you think about preparing for a prolonged bear market, which may or may not ever come given the increasing institutional demand? What do CEOs in your seat need to be most careful of if we were to see, say, a 3, 4, 5 year bear market? What can CEOs do to prepare for that outcome?
Yes. So the first is to not engage in short-term leverage. When I say short-term leverage, there are various things in it. The first one is you don't want to touch the Bitcoin. That's the first principle. You don't want to rehypothecate Bitcoin. You don't want to do funny BTC yield with Bitcoin. The only BTC yield that matters is the increase of Bitcoin per share. Everything else is an absolute distraction. And it's a major risk for any type of company. And everyone wants your Bitcoin. So that's the thing you don't do. That's the first one. And the other facet of it is you don't want to do convertible bonds that are of a 1 year or 2 year time horizon. It's a 5-year fiat arbitrage on a long-term intelligent type of leverage that you want to do. And even with this, we eliminated the credit risk by having 0 coupon plus the BTC denominated type of converts that we did. So there is zero credit risk on the operation. That's the first thing. The second one is, you will not be surprised, but you want to accumulate as much Bitcoin as possible, because the most Bitcoin you have during the bull market, the better it will be. And the most Bitcoin you have during the bear market, the better it will be, because you will be the company that will be the strongest because you have most Bitcoin. And the third thing is to follow the strategy. It is to issue securities that will be attractive during a bear market. And so you can definitely think of the type of preferreds that strategy is deploying that are extremely fit for purpose, both to address the credit market at scale on the traditional finance, credit agencies and so on realize that Bitcoin is the actual capital not fiat. And they're extremely fit for purpose for a bear market type situation as well. Because you will have a lot of companies that and institutions that will want to have a form of yield without the downside risk. So I think that is the key for companies. It's to overall focus on the core strategy and respect the core principles to maximize and to be in a position to still and continue to aggressively maximize the number of Bitcoin per share, even when the market goes down.
So we alluded to it and certainly have our own opinions, but curious, has the surge in corporate, institutional, and nation state demand broken the 4-year cycle, or do you think it will hold?
There has been a brilliant analysis of Yves Chefati, the founder and president of 2 billion asset manager Tobam, on French television, and I would like to bring that message here. The analysis that I think is quite correct is that the phenomenon of the altcoin season that existed 2 cycles back is dead. Nobody believes in tokens that have no fixed supply, or at least that do not represent another security. You could think of tokenized securities as having some purpose, the stable coins and the monetary funds and so on. But nobody wants to sell Bitcoin to buy another crypto asset, to put it simply. Of course, that's the case of Bitcoin maximally since the history of Bitcoin, but for the part of the industry that's new. And you've seen a lot of crypto people that were doing it already. Now they are starting to admit that they are literally selling other crypto assets to buy Bitcoin. And so what happens is in the previous bull markets, you had market participants, hedge funds and crypto people sell Bitcoin to buy crypto tokens with the aim of outperforming Bitcoin. And by doing so, they would kill the bull because they would sell Bitcoin to buy a crypto asset that would inevitably fail because it has no fixed supply and serves no purpose. To then be scared and sell that token to get back to fiat and wait for a bear market to settle down. And so what is happening right now is that with the FTX drama and with the BlackRock ETF and with the US government saying that it's Bitcoin only, what you have is all capital market participants in Bitcoin realizing that there is Bitcoin and nothing else, realizing that the US government will face an amount of interest within 5 years that will be the equivalent of the whole budget, and realizing that Bitcoin is the only way out of this, both for investors and for the US government, by the way, and that Bitcoin is the only way to allocate efficiently long-term capital, and that the only way to get more Bitcoin is the only thing that is better than Bitcoin is more Bitcoin. That's of course the conclusion. And so what is happening is that now, instead of selling Bitcoin to try to outperform Bitcoin, investors are literally giving Bitcoin and fiat to Bitcoin treasury companies that will buy Bitcoin to outperform Bitcoin. And so instead of killing the bull, you alimент the bull, That's extremely different. So now to outperform Bitcoin, you literally feed the bull. And that's, of course, very different. And then you can imagine that at some point, Bitcoin treasuries, for some point, they get extremely overvalued from a very short-term perspective because of a bull market that is going extremely well and so on. You could still have a bear market of Bitcoin treasury companies. But typically, those investors would get back to Bitcoin, which the Bitcoin treasury companies hold. So you see, the whole point of the Bitcoin treasury companies is that investors can indeed sell shares, but you keep the Bitcoin. And potentially the investors believe in Bitcoin, so when they sell shares, they buy back Bitcoin. So there will be, that's inevitable, downfalls and price going up, down, and there will be potentially an impact for purist Bitcoin treasury companies, of companies that go there just for the pump and dump, frankly, to announce that they have Bitcoin and do nothing and then sell shares. So that could happen, and that could affect as well the view of the traditional markets of a Bitcoin treasury company. But at the end of the day, you will have the companies that have done it the right way and the most efficient way and that have built the most scalable accumulation machine of Bitcoin. At the end of the day, all of the Bitcoin will flow to them because they will be perceived as the best risk-adjusted bets for an organization to keep buying Bitcoin for you. And you definitely want an organization to keep buying Bitcoin for you during a bear market, because then your levered position potential in terms of exposure will be multiplied in the next type of bull market. And whether we are speaking of a Bitcoin treasury company bear market or Bitcoin bear market, and the definition of a bear market will also evolve. Wall Street will call a 10% correction a bear market at some point in the future, and that will be extremely funny. And so in any time we will be just maximizing the accretiveness of the securities we issue and to accumulate as much Bitcoin as possible in the most responsible way and the fastest way as possible. So yeah, that's how I see this. I have no crystal ball. I do believe in cycles. There are monetary cycles. There is forces at play that we don't control, and that's above my pay grade. The only thing I know is that the more Bitcoin you have, the better you are. And so that's the way you operate, and that's the way you prepare for any type of future market state.
It's so well said, highlighting that when investors want to outperform Bitcoin, historically, they've gone into these altcoins. They've gone further out onto the risk curve, and they've removed their capital from the Bitcoin network. Whereas now, if you want to outperform Bitcoin as the hurdle rate, investors are looking at Bitcoin equities, and that remains the capital within the Bitcoin network. And you're not starving the bull, you're feeding the bull, and you just fed this bull. You just made me very bullish with that last answer. I wanted to play kind of a quick game with you if you're up for it. Mason, if you could go ahead and share our screen. So I prepared 8 qualities, 8 characteristics of a Bitcoin treasury company CEO. And I'm curious if you could, if you were crafting the best possible Bitcoin treasury company CEO, which of these 8 characteristics you would choose if you could only choose 3 of them. So I'll read them off for listeners that can't see the screen. But number 1, trusted by Bitcoiners. Number 2, media savvy and charismatic. Number 3, has asset management and capital markets experience. Number 4, is a relationship builder. Number 5 is a talent magnet. Number 6 is politically savvy. Number 7, intellectually curious. And number 8, systems thinker. If you could only pick 3 to create the ideal Bitcoin treasury company CEO, which 3 on this list would you take?
Trusted by Bitcoiners, asset management and capital markets, and media savvy and charismatic.
There you go. That makes sense. Those were the first 3 I added to the list because I thought that they were probably the 3 most relevant. So that makes sense, and I'm not surprised. And thanks for playing along with me on that.
Of course, the other ones are, you could consider any of the other, especially like intellectually curious, and the other ones you mentioned are extremely important as well. But there is a reason they are on top of your own list, I guess.
Yes, that's right.
All right, last question here for you, and it's one I'm excited for because I obviously deal with this in my personal life. Despite all of the success of the blockchain group and despite Bitcoin at all-time highs, I'm guessing there are still people in your life that don't believe in Bitcoin, don't take it seriously, think that you're stupid, frankly. What does that feel like, and what do you think it will finally take to win them over?
So I don't see it as winning them over. Um, um, I think that it might be a bias because I speak so much about Bitcoin that people might have abandoned to talk me out of Bitcoin. So I think that over the last year, it has shifted a lot. 1 year ago, talking about Bitcoin, you would get basically the incentive in a typical conversation from the other person to persuade him of having a curiousness of Bitcoin. Maybe 2 years ago, but yeah. So today it's different. Today is, I would say that the majority of people I meet are extremely curious about the Bitcoin Treasury company. And sometimes they are even more curious of the Bitcoin Treasury company than the Bitcoin itself. Because it seems like because of the appearance of major financial institutions on stage, on TV, the US government adopting Bitcoin, 99% of people feel that they might have missed something and that there might have been something in Bitcoin that they have not understood that might not justify them pushing back on Bitcoin without doing more work. And typically they don't have the time to do more work. And so they don't challenge any more Bitcoin. But they see this Bitcoin treasury company and then they are interested, or they have criticism. But I would say that on Bitcoin itself, I don't find it anymore that there is much criticism, frankly, because either people feel that they have not done the work or they just don't know about it. And on the Bitcoin treasury company side, I do feel that there is a lot of work still to be done on understanding that literally Bitcoin is the capital rather than fiat. Because if you understand that, you understand that it's normal in traditional markets to attribute a multiple of valuation of a business based on the value it brings to the balance sheet. And that's literally what we are doing here, but in Bitcoin terms.
All right. Well, this has been an absolutely fantastic conversation. If you ask me, like Chase said, I'm somehow becoming more bullish on Bitcoin and Bitcoin treasury companies. Listeners, if you're listening or watching and you enjoyed the episode, would really appreciate a subscription, a follow, a like, anything that you can do for free in order to help us get this content in front of more founders, business leaders, boards of directors, etc. Because this Bitcoin treasury wave is not stopping anytime soon, and we want to educate as many people as possible.
Maybe could I take 5 minutes
Yes, absolutely.
to address some of the questions I've seen on Twitter today, on X, regarding our conversation.
The floor is yours.
Yes. So the first one I've seen is, does it get harder to acquire more Bitcoin when you have more Bitcoin on your balance sheet? And I think that we've discussed that throughout various of your and I appreciate very much the question you've asked, Mason and Chase. It's been really showing the work you've done. So thank you. So I think a short answer is that yes, it is always harder to get Bitcoin for everyone. For every individual business institution, it will get harder and harder to put your hands on Bitcoin because everyone wants it. However, there are two aspects to a response to this answer. The first one is if you take the market as it is today and you expand in the future where the market stays the same. In this case, then it's possible that it would be harder to get Bitcoin if you are bigger. But if the market forms as an industry, as Bitcoin is being adopted more and more by companies over the world, and as credit markets and capital markets are opening to the securities that allow for the exposure to Bitcoin, then potentially the bigger you are and the faster you go towards some type of important size in the market, the more securities you will be able to issue that are basically backed in some way by the Bitcoin you have on the size of your balance sheet, as it is being recognized by traditional capital markets, the more you will be able as well to acquire more Bitcoin. And so there are two facets to this answer. In a short term, it might be possible that as a percentage of your balance sheet, of course, the larger your balance sheet, the harder it is to increase by 50% your stack overnight. And effectively, the Bitcoin supply is fixed. So you cannot go towards 10 million and just want to buy the double of it, while you can effectively go easily from 40 to 80 Bitcoin on your balance sheet. But it's to be nuanced by the fact that as the capital markets adopt Bitcoin, then the larger player and the most robust player and the most recognized players have the most options to issue the best securities and as well to acquire Bitcoin in the fastest way. The second question I saw is actually what are the most common questions from investors when we have meetings. Today itself, I had 5 investor meetings. So that is a lot of my time allocation is to speak with investors. The most common questions today revolve around 1, the MNAV understanding and how the months to cover is important to understand this, and how a company is uniquely positioned to both monetize extremely fast the premium and convert that into net asset value, and second, how the company is able to issue new type of securities to as well maintain and increase the premium over time, and what would be the state of the capital markets tomorrow, to consider that the earnings equivalent of a Bitcoin treasury company is effectively the BTC gain. So the Bitcoin you add on your balance sheet adjusted for dilution. And the number 2 question revolves around what is the view of the market considering new entrants and considering what are the key differentiator of a Bitcoin treasury company. And I think that the most important answer I can give today about this is that when you have a balance sheet effectively composed of some of the most important Bitcoin maximalists on earth and extremely long-term capital allocator, including Adam Back, UTXO Management, Fulgur Ventures, Tobam, and on a fully diluted basis, that can represent about 40 to 60% of the capital. Of course, that will be diluted over time as we include more investors and we have ATM and we have potential prospectus in the future and so on. But that shows you the strength of a Bitcoin treasury company that is backed by some of the most long-term oriented Bitcoin maximalists in the world. Literally, Adam Back, the only person mentioned in the Bitcoin white paper, for example. And that's the third question I saw. Is it an issue that Fulgur Ventures, on a fully diluted basis today, would have 45% of the capital? My answer is Fulgur Ventures is the largest Bitcoin venture capital fund, and they typically invest on a 5, 7, 8 years time horizon. They are literally building the whole Bitcoin ecosystem to contribute to the value of Bitcoin. They have a long-term perspective, and they are extremely strategic shareholders for us. And keep in mind, if tomorrow we do a similar operation as in March or at some point in a future state, one investor could come in and put the position of Fulgur from 45% to 30%, and then you issue prospectus potentially, and the ownership goes down. That's the whole business model of a Bitcoin treasury company. So yes, it's a long-term, extremely solid capitalization table with strategic investors that bring a lot of value to the table, including asset manager Tobam in France with Yves Chauffatier. They are a team of absolute beasts in math, and couple that with the absolute expertise on Bitcoin treasury companies. They have literally published a mathematical paper on strategies outperformance of Bitcoin. They have decomposed the elements that constitute the outperformance potential of Bitcoin treasury companies, and they are a 2 billion asset manager in France. That is extremely valuable for a Bitcoin treasury company. And the fourth question I typically get is the European context and how being in Europe can be a disadvantage or an advantage. And my answer to first, the observation is that investors typically think that Europe is in a decline and that there is not enough capital in Europe. And my answer to that is that first, you can look at our performance over the last 8 months. Second, you can look at the performance of the smarter web over the last months or 2 months. And you can look at the performance of H100. And so I will stop here, but you see that there is extreme demand from Europeans for Bitcoin treasury companies. And you know why? Because effectively, because of the difficulties that Europeans face, because of the risks in terms of tax increase on Bitcoin, because of the risk in terms of privacy, and because of the risk in terms of security that are increasing a bit in Europe, well, the Bitcoin treasury company effectively emerges as the best way to keep your money. Mm-hmm. And compared with the US, where you have already tens of companies, if not hundreds soon, that are already at least positioning to adopt Bitcoin as a reserve asset and so on, we are still the only one in France. And we are the first and largest in Europe. And there are not tens of Bitcoin treasury companies in Europe that I can tell you. And so at the same time, the convertible, just to give an illustration, but the Fiat convertible market in the US is about 80 billion. Strategy raised about 10 billion with this. The European convertible Fiat market is 60 billion. If we were to do the same, we would go straight to the CAC 40 of the 40 biggest companies in France. And you know what? Even if we don't do it, because we consider that traditional converts are not accretive, we can also do over securities. And we are already at, on a fully diluted basis, at a market cap of 1.3 billion. So just with executing relentlessly and extremely seriously the strategy playbook at European scale, there is a major avenue for extremely large scale capital at European scale. And you know what Europeans value a lot? They value a lot the history. They value a lot the fact of having strong principles And being the first and largest is not a small advantage.
Yeah, as Michael Saylor would say, Europeans have a need to know, and that you find Bitcoin when you have the need to know. So it makes sense that Smarter Web and the blockchain group are finding outperformance in those markets. And maybe last little silly question. When we talk about months to cover, are we talking about October or February? How are we measuring a month?
The months to cover the MNAV typically is done either with the first purchase or with the end of the year. Everyone can do its own calculation. In any case, frankly, it's still not that much time to look into the past. And so, as an investor, you should definitely make your own analysis and not assume every time that what happened in the past will happen in the future. However, what shows the mathematical paper of Tobam is that if you are a Bitcoin maximalist and you believe in the adoption of Bitcoin as the global store of value for the world, then the Bitcoin treasury companies are probably going to be one of the most valuable companies in the world, and probably the best risk-adjusted way to outperform Bitcoin in a way that is fully based and fully aligned on the Bitcoin maximalist principles, and in a way that infiltrates capital markets and fiat that accelerates the adoption of Bitcoin at global scale, and that put, frankly, Bitcoin exposure, and at the end of the day, it's inevitable, Bitcoin itself in the hands of more people as people understand more Bitcoin. And most importantly, I think that the Bitcoin treasury companies are contributing to the decentralization of Bitcoin, contrary to what most people think. The assumption typically is that the financialization of Bitcoin centralizes Bitcoin. What I observe is that Bitcoin is coming to the hands of more people around the world. You have new companies adopting Bitcoin every day. That is orange pilling literally the whole staff of the company every day for different companies. And the whole shareholder base now needs to understand Bitcoin. So then they can choose to go out or stay in. But then you have the entire employee base of a company that adopts Bitcoin being introduced to Bitcoin in one shot. And you have the entire shareholder base of one company every day being introduced to Bitcoin in one shot. And then you have banks all around the world, tens, hundreds of banks that want to stop being bleeding out flows out of their bank because everyone wants to buy Bitcoin and Bitcoin treasury companies, and they want then to offer Bitcoin custody services. And then what you get is a decentralized network of banking partners all around the world that want to offer you Bitcoin custody. And then they compete on the solutions that allow the individuals to withdraw Bitcoin. And then you get, at the end of the day, more individuals to hold Bitcoin in self-custody, which is good for Bitcoin.
All right. Well, I think we just about covered it all. You've officially dethroned Parker Lewis as the longest episode of New Foundations, but I'm really glad that we went so in depth. I know that you have to drop for an investor call and we have to drop for a client call.
Just
one more thing. Let's see.
Yes. For the anecdote, I would like to express my deepest gratitude again to Parker Lewis, because after going down the rabbit hole of Bitcoin, it is, the series of Parker Lewis, gradually then suddenly, that have finally put me as a complete Bitcoin maximalist 5 years ago, after being introduced to Bitcoin and having a lot of questions and learning about it. And it's with Parker Lewis' work that it gave the final decision for me to allocate all of my time and energy to Bitcoin.
I couldn't agree more. I think it's the best book in Bitcoin. And yeah, I really appreciate Parker as well. Alexander, where can the folks find you on X if they don't follow you already?
So you can find me on X or LinkedIn at Alexandre Lzay. If you want to get a message through, you can tag me on X. You can. I opened my DMs as well. You can also contact me on LinkedIn. My chief of staff is reviewing the messages, and you can challenge us over time on X and give us your recommendations. I strongly listen to all the feedback that is provided by our investors, and we treat with the same amount of importance our shareholders everywhere they are and all the profiles of investors. But you can always count on us to maximize the returns of Bitcoin maximalists that believe in the long-term potential of Bitcoin, because our full focus is to maximize Bitcoin per share.
All right. Thanks again for coming on.
Thanks,
Thank you.
Alexandre. Been great getting to know you. Thank you.
Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit AcropolisTreasury.com to learn more or to get in touch with our team.